All right, what's up? What's up? What's up, everybody? How we doing today on this fine morning? We still got the office TV on from earlier. Let me take care of that really quickly. I actually have no idea of what I did. Here, awesome. Ooh, can take care of that. Make sure that we're all locked in. Let me get this going too, man. That little bit of light that comes in from that bottom window is piercing. But hello, good morning. We are here. As I said over there, my Instagram story had some issues this morning, technological issues. You guys know how it is. But we are here pushing through and ready to dive into the information and news we have going on this morning. Hope everybody had a nice, restful, and restorative morning, despite my computer hitting me with ambush updates. We managed to get on here, which is nice because at one point I was like, all right, guys, you might be alone here this morning just going through the newsletter on your own since stuff seems to not be cooperating, but we got things going, which is good, right? Let's see what we have happening here. All right, all right, all right. Now, why did it? Oh, that's weird. Let me go back here. There we go. Oh, wow, that's annoying. They changed the. Can we get that stretched all the way out? Nope. Wow. So usually I open the newsletter from my email, but I went on the website today to read it, and man, they have some crusty UI issues going on here. I'm going to my email because that is gross. It's like all of the text from the newsletter is on the left side of the page as almost like they want there to be ads or something on the right side of the page. Like it just doesn't take up a full page view. And I just cannot deal with that. So as people make their way in here, I'm going to go pull up the newsletter via my email because that is gross. I don't know why it's got everything tucked onto the left side. Seems like my computer wasn't the only thing doing updates this morning. Seeking Alpha might have done some updates as well, but that is not cute. Not cute at all. So let's see what we got. Gonna check over here. Okay, awesome, awesome. So here we go, right here. We all ready? We locked in? All right, cool. Did you try refreshing the page? Yeah, that's true. Like I tried refreshing it, and it still came up the same. So I got no idea. Today just might be a day where technology is plotting against Adam. What else is new, right? But regardless, I've got it, kind of how I like it a little bit better in my email layout here. So our top news this morning as we dive in is tightening the belt. So if you owe the bank $100, that's your problem. If you owe the bank $100 million, that's the bank's problem. It's a famous quote attributed to industrialist John Paul Getty, but has been applied to many scenarios across many sectors. China is the latest to find itself in a similar predicament after lending nearly $1 trillion to developing countries under the Belt and Road Initiative, which President Xi Jinping dubbed the project of the century when unveiling his signature foreign policy in 2013. Now, bigger picture, many have subscribed or described the lending effort that funds infrastructure projects as a debt trap designed to create political goodwill and cement Chinese influence on the world stage. Yeah, this pretty much was just China being like, hey, pretty much trying to be the US. China being like, hey, we support infrastructure of the developing world, right? All the developing countries, make sure you ally with China. We're great people, et cetera, right? But it really just kind of ended up being a big debt trap for them where they're lending all this money to developing countries. And, obviously now, given the past, few years, it hasn't really been the best time to be lending tons of money to developing countries, given everything that's gone on with COVID, et cetera, right? Now, let's see here. China, in turn, refers to it being, the Belt and Road Initiative as a public good or an equivalent of the Marshall Plan, with 151 countries so far listed as having signed up for the BRI. The initiative was even incorporated into the Constitution of China in 2018, but a series of crises are threatening to push the project off the road, including the aftermath of the pandemic, inflation challenges, slowing global growth, and major loan repayments that are coming in a high interest rate environment. In fact, as of last year, 60% of China's overseas lending portfolio supported debtors in distress. So, literally, the overwhelming majority of their overseas lending portfolio supported debtors that were struggling, up from 5% a decade earlier. Nations like Zambia and Ghana, as well as Ethiopia and Kenya, are all trying to find their way out of a default, while Sri Lanka and Pakistan have similar debt problems, with Beijing becoming their largest bilateral creditor. In the past, emergency rescue lending and write-downs were explored, but China is taking a heavier hand this time around, complicating sovereign debt restructurings and the situation in emerging markets. Now, going deeper, debt risks and debt crises have the attention of G20 finance ministers who are meeting in Washington and were on display earlier this week during the, quote, Global Sovereign Debt Roundtable. And that was co-chaired by the heads of the IMF and the World Bank. So China softened its stance following the gathering, saying it was willing to drop a demand that multilateral lenders share some of the pain and would work through the G20 common framework for debt treatments. But only time will tell how things will play out. Quote, the response of China will reveal much about its position in the 21st century international financial system, said Seeking Alpha contributor The Angry Bear. And they declared that in an article titled China and the Debt Crisis. So overall, right, China not only struggling with the real estate issue, with the Evergrande crisis, right? China just throwing out too much money across the board, right? They're throwing out too much money, investing in real estate that no one bought up. And, they're throwing out too much money to all these different countries, trying to build up goodwill and show that they're a hero on the global stage. And these people that they lend to, right, these countries can't lend back, right? Can't come correct on their loans. So, overall leaves China in a sticky spot, and it looks like they might have to start using some more heavy-handed tactics when it comes to collecting on their debt. But, the Belt and Road Initiative, one of the premier policies that has kind of defined President Xi Jinping's presidency. Again, them comparing it to the Marshall Plan, which we all learned about, in history class. That it's not really going according to plan, right, as they like to have it. So we'll see kind of what ends up going on, what happens with China. But as of right now, everybody's got a lot of debt and a lot of debt they can't really pay back. So what is that going to equate to? I do not know. How does that look when people are picking sides between the U.S. and China? I don't know, right? Maybe these countries run to the U.S. and they say, hey, save us. We owe China a ton of debt. Now they're being mean to us. Or China says, hey, you owe us a ton of debt. Now you've got to do this in exchange, right? Maybe only do business in the Chinese yuan, or et cetera, right? So when you have a lot of people indebted, it ends up kind of further adding to that tension that's already pervasive around the globe, right? That tension between the U.S. and then China and Russia. So again, something else to keep your eye on. But when you start hearing these things and you kind of hear these little bits and pieces, they start to provide puzzle pieces to build you a larger, more concrete picture, right? So when people say, oh, well, how do we end up at war with China? Well, there's actually a lot of different things that have been going on over the past few years, right? And you've been here being committed to being 1% better each and every day, investing in the pre-market rundown. And you've been here and you've made it happen, right? So now you can sit here, you can say, well, actually, I do kind of know a little bit about what's happened. Let me walk you through the last few years and how these tensions have escalated and culminated, in the conflict that we currently find ourselves in, right? So in terms of financials, bank earnings, JPM, Citigroup, and Wells Fargo, so JP Morgan, Citigroup, and Wells Fargo, will kick off Q1 earnings season this morning, giving investors a look into the sector for the first time since the banking crisis last month. Note that the crisis mainly impacted U.S. regional banks like SVB and Signature Bank, and not too big to fail players that are due to report today, with the exception of Credit Suisse, which was ailing for years. The full effects of the crisis may not show up until the next earnings quarter, though investors will be paying attention to any comments on the macro and consumer landscape, as well as the likelihood of a recession, especially during the conference call of JP Morgan CEO Jamie Dimon. So Seeking Alpha Investing Group's leader, JR Research, calls out Citi ahead of the earnings show, calling it the cheapest among its leading GSIB banking peers in the U.S. No, I haven't checked out any of these tickers this morning, but as I said yesterday, I'm bullish going into JP Morgan's earnings. Like I said, they're a huge bank. They do very well for themselves, and a lot of people have run from the crusty regional banks to the big banks. So I would not be surprised to see them up this morning. So we can check on JPM here in this AM. Yep, JPM up off earnings, right? So it looks like we closed yesterday at 129. Looks like we're as of right now at around 137, 136, right? So nice little jump for JPM. We'll see if that holds. But overall, JPM, like I said, very strong bank. We have a lot of depositors moving from regional banks to the big banks. So I personally didn't feel like kind of diving in myself, but it's something that I mentioned throughout the week. So if you had the courage to go ahead and dive in, awesome. Congratulations to you. If you play that upside on JPM, right, you might get paid here this morning as long as the IV wasn't too high. Now, in terms of being on the move, very shiny. Gold is now within $10 of its all-time high as a number of drivers propel the precious metal and its peers toward new records. Catalysts include economic worries and fears about a recession, as well as lower U.S. Treasury yields and a weaker dollar. Shares of the precious metal miners have ridden gold's advance, with year-to-date gainers including Agnico Eagle Mines, ticker AEM, which is up 11%, Anglo Gold Ashanti, which is up 39%. Their ticker is AU. Barrick Gold, whose ticker is GOLD. Franco Nevada, ticker FNV, who's up 14%. Gold Fields, ticker GFI, which is up 45%. Harmony Gold, HMY is their ticker. They're up 34%. And Kinross Gold, ticker KGC, up 25%. So there has been a sudden, unexpected shift in investor sentiment to the broad belief gold is going higher. This is always cause for caution, writes Michael James McDonald in a new Seeking Alpha analysis that explores options activity. So overall, this is something that happens, right? When we see inflation increasing, we see gold going up, right? We see silver going up. People flee to safe haven assets. It's something that we personally, like I haven't indulged in much as of recent. And that's just kind of because of what I've had my attention on. It's nothing against gold. It's just that sometimes precious metals can be manipulated. So it's just like it can leave a bad taste in your mouth sometimes. But overall, right, it's nothing against gold and silver. They just don't move as assuredly as they used to. But again, this is something where it's a classic lesson to be learned, right? Whenever inflation is high and the dollar is worth less, then people are going to flee to safe havens, right, for their money. And that typically ends up being gold and silver, right? Things that people can count on holding a correct store of value. But it's just tough when you have all the sketchy stuff that's been coming out. Like Vivian, we were talking about where was it that bank that thought that they had reserves of actual precious metals, and it was just like little balls of something. Like it was like a joke. Like they had like a bag of rocks and they thought that the bags of rocks were like actual precious metals and they weren't. And it's just like this sounds like something off of like a TV show episode, like a Tom and Jerry episode or something. Like, how are you a major bank? You have no idea that someone's giving you bags of rocks to back up the precious metals that you have. So that's why I kind of just have a mixed opinion with, yeah, literally rocks, right? I just have like a mixed opinion when it comes to precious metals now. I'm kind of just like, I don't know what everyone is doing, right? And these big banks tend to like to manipulate the price of precious metals with things called spoofing. So they basically flood the market with like essentially like fiat silver and fiat gold. Like it's not real, but they flood the market with, kind of shares of gold and silver ETFs, but it's not backed by real gold. And they do that in order to like artificially keep the price low. Like JP Morgan, like a number of banks got in trouble for that, a few years back. So it's just like, it's tough, right? Sometimes precious metals behave, sometimes they don't. But right now they are nearing all-time highs, which is great for that. In terms of trending news, cue the controversy. Cancel culture is meeting the stock market again as many debate the direction of Anheuser-Busch, ticker BUD. Shares following Bud Light's marketing deal with transgender social media influencer Dylan Mulvaney. I saw a couple different headlines on this. While analysts have expressed various perspectives, like stinging suppliers to the, quote, backlash is overdone, to the stock is only, or excuse me, the stock is only down about 3% since the Instagram video first surfaced on April 1st. A week earlier, VP of Bud Light, Alyssa Heinerscheid, commented that there would be no future for the quote declining brand if it didn't evolve to attract younger drinkers by shifting the tone to inclusivity. So yeah, we got controversy going on as Bud Light. You guys might have seen this. I guess picked up a marketing deal with the transgender social media influencer. Of course, there's been tons of backlash. I saw like Kid Rock was like, "I'm done with Bud Light," and everybody has their own opinion. I'm not out here actively trading Bud Light often, anyways. But it is one of those things where it's like, okay, you can check out the chart, see if there's anything here that is, kind of looking like any type of major trade opportunity here. Bud Light was crushing it. Looks like they pulled back a bit. So it could be something to keep an eye on, right, during this pullback to see, when or if Bud Light, starts to recover. That could end up making for a nice trade. Let's see if they're optionable. They are kind of widespread, so you have to keep an eye on them. Yeah, you'd have to keep an eye on it. Probably end up using the mid price to purchase, but Bud Light not too bad of a chart here, honestly. So that might be something to take a look at here. Again, their ticker is BUD, so that's for Anheuser Busch. And like I said, they were on a pretty crazy run for the past few months, right, to the upside. They have a lot of gaps in the chart, though. I'm not sure exactly why they move like this, but they gap up and down a lot. I guess moving up and down overnight. Um, so yeah, we'll see kind of what ends up developing from this, but they actually do have a chart that looks kind of interesting here as we head into the day. So we'll keep tabs on ticker BUD as we head into today's trading session. In terms of today's markets, kind of mixed bag across the board. In Asia, Japan up 1.2%, Hong Kong up 0.5%, China up 0.6%, India closed. The FTSE in London up 0.3%, Paris up 0.3%, Frankfurt up 0.4%. The Dow down 0.3%, S&P down 0.2%, NASDAQ down 0.3%, crude oil up 0.3%, gold down 0.2%, and Bitcoin up 2% to 30,847. We've been riding that wave as we did another over 100% profit play on Mara yesterday, and Mara up again this morning here as well. So a number of things to keep an eye on, right, as we go into today's trading session. Now, in terms of today's economic calendar, at 8:30 a.m., we got retail sales. We have Waller, remember the Fed speaking at 8:45, so they are likely already on. What else? We get consumer sentiment at 10 a.m. That is a piece of data that might move markets. So far, we've got consumer sentiment. If it ends up being fade the first move and the second move is the real one. So the past few times, I believe we've like popped up for a quick second and then dropped. And if we do drop, then typically we drop for like 1 to 2 minutes and then we go back up. So that's just what I've been seeing. It's not a full-fledged fact, right? It's just saying that overall, the past few times, consumer sentiment has dropped at 10 a.m. You've seen, okay, there's a move that goes on for a few minutes, and then that move typically fades, and the other side is the direction that we go. So keep an eye out for that at 10 a.m. Now, in terms of what else is happening, cooler than expected price producer index or producer price index follows CPI data. And that led to, bullish sentiment yesterday in markets, along with, what was it, the jobless data, right? Boeing, ticker BA, skids on warning of 737 delays from supplier issue. Then Delta Airlines, ticker DAL, profit figure fails to meet analysts' expectations. French protesters storm HQ of LVMH with stock at record high. Big Discount Express, ticker EXPR, buys bonobos from Walmart. That's kind of cool. Love bonobos. My mom loves bonobos as well. Very comfortable socks. Apple glasses, ticker AAPL, not likely to be seen for several more years. Gene editing stocks rally as Wall Street turns bullish. Like, what is the purpose of that headline? I feel like if markets turn bullish, then all stocks turn bullish. I don't know what the purpose is of calling out gene editing stocks. There might be like, I've got no idea, but that I feel like really just doesn't matter, it's like saying if somebody gives, so it's like saying they wiped away student loans, right? So yesterday, the Supreme Court upheld that decision to wipe away a ton of student loan debt. That's like saying out of all the people that got their student loan debt wiped, it's like, you know, 35-year-old men with bald heads get their student debt wiped. It's like, yeah, them amongst everyone else. So I think that's just a weird kind of baity headline where it's like gene editing stocks rally as Wall Street turns bullish. It's like everything rallied and everything was bullish. So it's weird of you to single out that one thing without having like supporting information behind it. Biden's still no friend of fossil fuels despite Alaska okay. That might be Oklahoma, or maybe he gave the okay for mining in Alaska. That sounds like that was maybe it. So still, he says he's still not a friend of fossil fuels. We'll see. BP, ticker BP, starts oil production at new Gulf of Mexico offshore platform. Amazon boosted by Jazzy Letter and new AWS tools aimed at AI. We made profit off of that, right? Over 100% profit, because we talked about that yesterday on the pre-market rundown. Amazon's AI news would likely cause them to pump, right? What happened? Amazon pumped. Being here for the pre-market rundowns, very, very, very important, right? Bitcoin, ticker BTC, USD surges 81%. Is the rally for real or just FOMO? I don't care if it's for real or just FOMO, because it's putting money in our pockets, right? Which is what's most important. Am I a Bitcoin maxi? No. Do I take advantage of stock market opportunities in different sectors? Yes, my friends. Yes, I do. And that's exactly what we're doing here with Bitcoin. So let's see here. Without further ado, that will wrap us up here for the pre-market rundown on 4/14/2023. As always, if you got even one positive piece of information, even just a little morsel, right? Make sure you show love to the account, the Instagram account, right? With the reels dropping every day. Tune into those reels because that is free continued education, right? You might say, Adam, I'm not on Instagram. I don't go on Instagram. Do you want to make money? Do you like making money? Go on Instagram, right? Go on Instagram and use it as a tool in order to increase your productivity and your knowledge about putting your money to work for you, right? So all that good stuff, make sure you check that out, engage with it. Other than that, it's been a great week, right? There have been wins, there have been lessons, there have been gut punches, there have been fist raises, right? There have been tons of experiences. And that's the great thing about trading, is that whether or not you're winning or you're losing, that experience, right? As long as you're taking inventory of what happened, that experience is what ends up being the most impactful part, right? So everybody have a great rest of your day. Have a great, amazing, safe weekend. And I'll see you back here on Monday for our next pre-market rundown session. Have a good one.